Good afternoon, everyone, and morning and evening. It is the 27th of May, 2021. Happy Thursday. Taking a look at Cardano. So, yesterday we had this really nice bullish close above 72. I indicated that that is a thing to look out for. However, today we see it trying to trade higher. We have I can't talk today. We have roughly 2.5 hours before the next daily candle opens up for the Friday candle. And we have yet to break yesterday's high. Also, notice that we've dropped back below the Kijun Sen. So this is warning us of some, likely pressure south again. It's hard to, this is why I hate trading ranges, is because they're really difficult to determine what's going on. We don't see a whole lot of movement one direction or the other. I just got done with Bitcoin's video, and something that I've noticed across the board here ever since really the 19th, 20th, whatever, is this big drop in volume. So participation has jumped to the outside quite a bit. We just haven't seen a lot of people involved. People have left. And that's a little concerning if you're somebody who wants to be very bullish, because as the old saying goes, volume precedes price. Now, I'm looking at this on the daily chart. I also see that the composite index, which is the red line, it did cross above its fast average. That's bullish. Now we're kind of flattening out, and you can see that the slow average, maybe you can see, I can barely see it myself. Why is it so? There we go. The slow average, not COVID, it's dry down here. The slow average is still above, and we just don't see it really making a huge push to the upside. That could certainly change, but just be aware of that. Then we have this condition here. If we connect these lows with the RSI, you can see that we've dropped below. That is a bullish scenario. But at the same time, the percent B oscillator and the RSI could be setting up for head and shoulders pattern inside the oscillators. And those are really great kind of hidden gems of patterns to identify, because we oftentimes spend too much time looking at trend lines and head and shoulders patterns and pennants and flags just on the price chart, when you should be looking down below at the oscillators as well. There is some hidden bearish divergence here. So we have higher highs in the composite index, but lower highs in the RSI. That is hidden bearish divergence, which points to prices moving lower. Just looking at the hourly chart here on the current hour, it looks like it's trying to build up some pressure above, but again, we're just going to have to kind of wait and see. This is definitely really kind of a repeat of yesterday in many ways, because the lagging span, it's still above the candlesticks. That's bullish. But we still have some pressure up ahead for some further downside movement. Again, I'm not going to be jumping on the bull wagon really until we get above the prior all-time highs. And I want to see what happens now, because we've fallen below 55. We've been rejected, and we've tested 40-ish as a 45-ish as a support level and held. I want to see what happens now if the RSI does dip down to 45, because if it drops below 45 from here on, that is a warning sign that we could see some pretty strong selling pressures. Additionally, if the percent B drops below, that's the other thing. Price wise, again, near term, we'd be looking at, I really don't have to draw anything out. It's that 84 cent to 94 cent value area is the current kind of buy limit zone for me, where I see prices kind of finding some activity and action is between that 84 cent and 94 cent range. There is a case for a back and fill where the volume profile gets filled in because it's very thin between 40 cents and $1.20. We just have a very thin profile. And I mean, a lot of volume was traded in there, and we see overwhelmingly it was buying volume, but there may be a reason that we haven't tested down here yet, and that's because we might be testing it here again very soon. Um, Again, these aren't the most fun times to trade because it's very much a hurry up and wait. I keep repeating that phrase, but that's exactly what we're doing. So the real danger as traders is becoming impatient and trying to force the market to do something that you want it to do. And that really never works. You want to wait for the market to come to your criteria. Don't try and force the market. So is it annoying that things are just kind of going sideways and we're not seeing a clear move yet? Sure. But this is where you just kind of have to sit on your hands and hold on and wait and see what happens. And that's what I plan on doing. From all of us here at Exchange Rates UK TV, thank you for watching. Please don't forget to like and subscribe.